and welcome to Business 360. I'm Arundhati Ramnan, and these are the headlines that we're tracking for you this evening. Sensex and Nifty end with marginal gains after a range-bound session. Nifty Bank ends at a record closing high. Rupee weakens marginally against the dollar and remains just short of the 82 mark. The Finance Ministry is looking at ways of simplifying capital gains tax provisions, is of the view that it could ease compliance and remove disparity between several financial instruments which fall under similar categories. That's an exclusive. Sources tell CNBC-TV18 that Poonawalla FinCorp may put its housing finance business on the block. Sources suggest that the asking price for it by the parent company is 3 times the net worth of the arm, which is reported as 1,100 crore rupees in September this year. TPG-backed cable manufacturer RR Cable eyes listing on Dalal Street by October next year, looks to file its draft papers by May. RR Cable is looking at raising up to 2,000 crore rupees by diluting around 15% equity. Protests at the largest iPhone factory in China. Visuals and images on social media show hundreds of workers at the Foxconn plant clashing with riot police and people in hazmat suits. The factory has been under a lockdown after several people reportedly tested positive for COVID. Winds of change at Manchester United. After 17 years at the helm, the Glazer family is exploring the possibility of selling the football club. Cristiano Ronaldo has agreed to leave the club by mutual consent after criticizing the owners and the manager in a recent interview. Straight to all the market action of the day. A range-bound session on Dalal Street ended with marginal gains. The Sensex gained just around 100 points and the Nifty gained about 20 points. The Nifty Bank ended at a record closing high. Prashant Nair is here with a wrap of all the trading action. Prashant?
It's becoming a bit of a feature with this market. For the bulk of the session, the market does nothing. Action right at open and action right at end. And today was no different. I mean, the market did what it had to do in the first 2 hours of trade. By 11 o'clock, the market went sideways. For the next many hours, it traded with a 40, 50-odd point change before coming alive again at 2:30. We saw a bit of a creep higher, and at 3 o'clock, starting 3 o'clock, there was a dump, and the market ended absolutely flat. Just a 10-odd point change. Similar price action on the Nifty Bank as well. A Nifty Bank, although did a little better as compared to the Nifty. Mid caps and small caps ended about a quarter and a third of a percent higher in that range. Large cap gains and names like Apollo Hospitals, JSW Steel, HDFC Life, amongst others. Losses coming through in Adani Enterprises, Sports, Power Grid, and the like. Lots of sector-specific activity, right? Sector, subsector. So fertilizers is an area which saw a big boost. RCF, GNFC, GSFC, NFL, FACT. This is a new sector which has come into momentum today. The rail stocks are speeding ahead. RVNL, Ircon, RailTel, and they've had fabulous runs in this month so far, and the previous one as well. Broader gains, apart from these sectors, in RHIM, KPIT, NBCC, Hudco, a lot of these PSU, smaller PSU names coming into action. BKG was up about 10% by close. No such luck for the new age, newly listed companies, Paytm, Nykaa, Delivery, Policy Bazaar, all ending lower. Policy Bazaar, of course, came up a little bit, ending flat. So that's the market for you. As we kind of grind into the close of the year, you got to be wary of illiquid markets. And this is a feature which happens every year. Price moves seem exaggerated. In the very near term, you've got the FOMC minutes, which we get today. And tomorrow, you've got the US markets, which are shut because of Thanksgiving holiday, which will only add to illiquidity. The market did come off today. We'll come back tomorrow with, of course, cues from the US and the FOMC minutes to see if we can pick up where we left off.
All right, Prashant, many thanks for those details. Now, the Finance Ministry is looking at ways of simplifying capital gains tax provisions. Timsy Jaipuria joins us now with the details. Timsy, what are you picking up?
Right, what we are given to understand from sources is that the Revenue Department is currently studying provisions of capital gains tax structure. The department is in favor of further simplification of capital gains tax provisions, and once approved, these provisions, the new provisions, could be part of the budget announcement. The view prevailing at the Revenue Department is that there needs to be simplification of this particular law. There could be simplification just in terms to provide ease of compliance and cleaning up of the complex law, and to remove disparity between several financial instruments which fall under similar categories. The proposal which is under consideration is that to have three broad categories of assets, that is equity, non-equity financial, and the third being non-financial. Also, the proposal is to continue a special treatment for equity assets, whereas to remove disparity of rates and holding period for both short-term and long-term for non-equity financial assets. When it comes to non-financial assets, the proposal is to revise indexation base to a newer base year, which since the earlier base year is 2001 and it is quite outdated. So to moving it to a more recent year could be something which could be on the anvil. Let's see what is the final proposal and whether the department is convinced to go ahead with these changes or not.
So the government, they're trying to simplify capital gains structure. Thank you so much for those details, Simzi. Now let's take a look at the business headlines we're tracking for you this evening. Sources tell CNBC-TV18 that Poonawalla FinCorp may put its housing finance business on the block. Sources suggest that the asking price for it by the parent company is 3 times the net worth of the arm, which was reported at 1,100 crore rupees in September this year. Now, the Supreme Court dismisses Tata Power's plea challenging Maharashtra power regulator's decision to award a 7,000 crore rupee transmission contract to Adani Electricity on a nomination basis. The apex court upheld the order of the Appellate Tribunal for Electricity. The government is unlikely to deviate from its fiscal glide path in the budget. A top government official tells CNBC-TV18 that the government is aiming at reducing its fiscal deficit by up to 70 basis points by FY26. Sapna Das joins us now with the details. Sapna, what's the government's plan here?
Well, what we are clearly given to understand at this point in time is that the government is intending to stick to its fiscal consolidation glide path in the coming budget. This would mean basically a steady reduction in the fiscal deficit aim by 60 to 70 basis points every year over the next 3 years. Now, their aim is to bring it down below 4.5% by FY26. So, 60 to 70 basis points reduction every year starting from the next financial year would basically, bring them somewhere over there. Now, this year's aim is 6.4%. If they are able to meet or rather maintain this aim, then a 60 basis points reduction next year would mean somewhere around a 5.8 to 5.9% deficit aim, even with the marginal slippage this year. So, more or less, they are very clear on the fiscal consolidation glide path, and at least as of now, there's a clear intent to stick to that, and maybe the coming budget could enumerate or flesh out at least some of these important numbers that we're talking about.
All right, Sapna, thank you so much for those details. Now, there are more hurdles for the resolution of Jet Airways. The Jet Airways Officers and Staff Association has sent a notice to erstwhile resolution professional, the Jalan Calrock Consortium and Committee of Creditors. The notice seeks payment of PF and gratuity as ordered by the NCLAT before selling any assets. It also warned of legal action if the NCLAT order was not complied with. Indigo has launched its second aircraft maintenance repair and overhaul center at the Kempe Gowda International Airport in Bengaluru. The airline's first MRO facility is at the Delhi airport. The airline has signed a 20-year pact with Bangalore International Airport to sublease 5 acres for the facility, which will accommodate 2 narrow-body aircraft and supporting infrastructure. There's another EV player joining the Indian electric vehicle space. Hindustan Motors announced it has signed an MOU with a European partner to make electric vehicles. The company did not mention any further details, but its shares rallied in trade after the announcement. TPG-backed RR Cable is prepping for a Dalal Street debut. Sources tell CNBC-TV18 that the company is likely to file its DRHP by May 2023. Now, the company is likely to raise around 2,000 crore rupees via dilution of 13 to 15% of equity. And Yash Jain joins us now with the latest details. Yash, take us through RR Cable's D-Street plan at this point.
Well, that's correct, Arundhati. So, as far as the company is concerned, that is RR Cable, they are, putting all the efforts together, all the preparations as far as the IPO is concerned. What we've been given to understand from our sources is that RR Cable has already started, having investor banker presentations, in the process of finalizing investor bankers for this particular IPO. As far as the details are concerned, what we've been given to understand is that the company is likely to file the DRHP for its IPO by May 2023 and actually look at launching RR Cable IPO by October 2003. As far as the IPO itself is concerned, it's a large offer for sale element and a very small fresh issue as far as the split goes. And the parent, the holding company, that is RR Global, RR Kabul will be the second company from that group to get listed. Remember, the first one is Ratna Wires, of course, so that is first company which got listed. As far as details of the issue are concerned, RR Kabul is likely to raise about 1,500 to 2,000 crore. That will be through a dilution of about 13 to 15% equity. IPO is likely to value RR Kabul at about 11,000 to 15,000 crore rupees. TPG Group, which owns about 21% stake in the company, is likely to sell about 10 to 12% of its holding in the company. And the Kabra family, which is the promoter family, is looking at about diluting 2% of its equity in the company. Finally, as far as TPG Group is concerned, we've written to TPG Group as well as RR Kabul, RR Global, and we are yet to receive a response from the company on this particular story.
All right, Yash, so that's RR Kabul's road to the Lal Street. Many thanks for those details. But on that note, it is time for us to head into a short break. But more news and updates continue on the other side. Stay tuned. Welcome back. You're still with us on Business 360. Now, the representative of women in India's corporate boardroom has increased. However, India Inc. has a long way to go in achieving gender parity. Archana Solanki is here with some new data. Archana?
Thank you, Arundhati. It's time to put the spotlight on gender diversity in boardrooms and women in leadership roles. Now, according to a new study conducted by proxy advisory firm Institutional Investor Advisory Services, gender diversity is growing in boardrooms, so that is a positive piece of news. But let's go beyond the headline. It's growing at a very slow pace. Now, women directors accounted for nearly 18% in the top 500 NSE-listed companies at the end of March this year. From 6% in 2014 to 14% 5 years ago, women now account for 17.6% of directorships. Of the total 4,694 directors of Nifty 500 companies, only 827 were women. Although the number of women directors is increasing, the pace of appointment is very slow, with just 1% increase over the last 3 years. And the report also notes that if this trend continues, we'll achieve 30% gender diversity on boards by 2058. So who is doing better than India? Country-wise, France is leading the pack at 44.5%. Women representation on boards in 2021, whereas Europe has 34.4% women directors and North America 28.6%. And if we go by this study, the biggest disappointment came in from the public sector undertakings that continues to fare poorly, with women representation on their boards at only 13.54%. It's important to note that Companies Act 2013 made it mandatory for boards to have at least one woman director from April 1st, 2014. Now, this regulation resulted in a threefold rise in women being appointed directors. Now, the report urges corporate India to invest in building a strong female talent pipeline, accept them in leadership positions, and address gender pay gap. Back to you.
Absolutely. So women in boardrooms, they're better today, but we still have a long way to go when it comes to gender parity. Thank you so much for all those details, Archana. Now, CNBC-TV18 is all set to lead the charge with a one-of-a-kind mega initiative, Future Female Forward, the Women's Collective presented by HSBC. The initiative will be officially launched through an exclusive on-ground event on Friday, November 25th, with several women leaders of India Inc. Also in attendance will be some of the most influential voices from the business, entrepreneurship and entertainment spaces. Don't forget to tune in to CNBC-TV18 on Friday, November 25th, 5:30 p.m. onwards. And shifting focus to the banking sector, many large private banks seem to be following an old-school method of boosting growth of opening branches during the last few quarters. Abhishek Kothari is here to break this down for us. Abhishek, take it away.
Now, one of the key trends that I've noticed over the last few quarters is that private banks in India are going old school, at least the large ones. This is a reference to them opening up branches in the last few quarters at a time when digitization is getting a lot of ground. So these large banks have also been growing faster than the industry's growth rate over the last couple of quarters, with focus especially being on the retail loan growth. So in last 5 quarters, HDFC Bank has opened 846 branches, a growth of about 14.3%. ICICI Bank has opened about 346 branches, a growth of 6.4%. Axis Bank has opened 160 branches, a growth of 1.7%, while Kotak Bank has opened 98 branches, a growth of 5.4%. When you open branches, you tend to gain on deposits, and it also aids in loan growth going ahead. Hence, the business momentum increase with branch expansion actually takes place. So from Q1 FY22 to Q2 FY23, the business per branch has grown by 5.9% for SDFC Bank, 9.4% for ICICI Bank, and Axis Bank and Kotak Bank around the 11.5% mark. Hence, branch expansion has worked the most in terms of business momentum for Kotak Bank and Axis Bank. The best part of branch expansion, or the sweet part, is to gain the low-cost deposits. Especially when you open a new branch, the liquidity that comes in right now has become tighter and expensive. So the focus would be on the CASA, or the low-cost deposits called current account and saving account. The growth in CASA per branch has been led by Axis Bank, ICICI Bank and SDFC Bank. The Kotak Bank is the only bank to witness a decline in CASA per branch over the last few quarters. Branch expansion always comes with a cost. SDFC Bank, despite having the highest number of branch openings, has seen the lowest rise in cost per branch. So between Q1 FY22 to Q2 FY23, the operating cost per branch has risen by about 19.6% for SDFC Bank, about 26.9% for ICICI Bank, 29% for Axis Bank, and about 36.7% for Kotak Bank. So SDFC Bank has been the most cost effective with respect to branch openings, while Kotak Bank has been the worst. So branch expansion also aids in loan growth, especially in the retail segment. Now, market share has risen massively for SDFC Bank. Over the last 5 quarters, if you take a look, the market share gain is about 113 basis points for SDFC Bank, 62 basis points for ICICI Bank, about 32 basis points for Kotak Mahindra Bank, and only 12 basis points for Axis Bank. So despite digital transactions increasing, private banks' focus on branch expansion may seem to be a surprise. The opening up of branches also aids in market share gains as banks draw more customers, especially away from the NBFCs. The recent push for deposit by PSU banks do suggest that private banks have seen this coming. With liquidity crunch and banks focused on loan growth, branch expansion will aid in business momentum going ahead.
All right, Abhishek, many thanks for those details. Now, a quick look at the global headlines that we're tracking for you this evening. Protests at the largest iPhone factory in China. Visuals and images on social media show hundreds of workers at the Foxconn plant clashing with riot police and people in hazmat suits. The factory has been under a lockdown after several people reportedly tested positive for COVID. At least 6 people were killed in an incident of alleged mass shooting at a Walmart store in America's Virginia. The suspected shooter has been shot dead. China continues to witness a surge in COVID cases. The country has reported its daily COVID case count at over 29,000, which is near the level seen in April. Chinese officials have also announced requirements for more frequent virus testing. Officials have further ordered more restaurants to suspend in-store dining, while several apartment compounds have been locked down. Rapid developments at what is arguably the most popular football club in the world. Manchester United have announced the departure of Cristiano Ronaldo after he criticized the club, its owners and the manager. Soon after, it was also announced that the Glazer family is open to selling the club, sparking a rally in the share price and euphoria among fans. Here's a report from CNBC Europe.
It is a move that is predicated by a lot of disruption. You've had a calming period post-COVID-19, and this is probably the peak of football clubs' valuations, one would think, because of all the economic despair that could potentially be on the rise now. And maybe this is a time for the Glazer family, which does own the club, of course, to look back and say, we've tried for 17 years. We didn't get in the amount of money we would have wanted to help the stadium be refurbished, which is a huge issue and a pain because there's leaking roofs, there's rat infestations in some parts of the stadium now. And fans have just said, well, things haven't gotten better and we're declining when it comes to performances on the pitch.
It seems to me like part of the issue is they took on so much debt to finance the deal to begin with, and that is that the club has just been sitting on in an environment, as we know now, that interest rates are beginning to go up. The second thing is they don't seem to be the only club that are going through these financial decisions.
No.
Liverpool, there are reports of the owners also looking to sell the club. We know that Chelsea recently exchanged hands. So to your point, it feels like a bit of a moment and in terms of potential change of ownership of clubs in the Premier League.
Yeah, I mean, we're talking about what is arguably the biggest known footballing name in the world. And if Chelsea could be sold for £4.25 billion, the valuation around Liverpool's around £4.45 billion. So Manchester United could get anything from that. It's currently valued at around £5 billion too. And the people that they've kind of put in, the bank that they've asked to be a part of this and help them sell the club, is one that got that £4.25 billion for Chelsea when they were forced to sell in the time of Roman Abramovich as the Ukrainian war was starting. So there certainly could be a case for United to get more out of it.
And with that, it is a wrap on this edition of Business 360. Many thanks for watching, but stay tuned to CNBC TV 18. More news continues on the other side. Stay tuned.